Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of USD CAD, US dollar, Canadian dollar. So if you're watching my videos for the first time, then subscribe to my channel for regular market analysis. So this is the 4 hour chart of US dollar, Canadian dollar, USD CAD. And as you can clearly see on the chart that this market is going towards the upside. So this market is in uptrend, and as we all know, the thumb rule of the market is always follow the trend. Therefore, considering the trend of the market or considering this uptrend, we should mainly look for buying opportunities. It's not it. Yes, we should mainly look for buying opportunities as this market is an uptrend, and we can clearly see that market is going up, forming higher lows here. And apart from higher lows, we can see that if we join the higher lows, then we are getting a trend line which is acting as a support for the market. You can also draw this trend line in your charting software or trading platform so that you get a better understanding of the USD CAD. So once we join this higher lows here, then we get a support level for the market. On the other hand, we also have a resistance for the market, and if we join this higher highs and lower highs here, then we get a channel here, and this channel is going towards the upside. Clear? Okay. So this is the resistance for the market and this is the support for the market, and this market is an uptrend, and considering the thumb rule of the market is follow the trend. As we all know, the area of value or the best trading opportunity in an uptrend market is always near the support, and in this case the support is this trend line. Okay, and right now market is trading in the middle. So this current market position is not ideal for trade, because see, if you buy here, then your stop loss will be here and this is your take profit target, and you can easily see that the risk to reward ratio is not in your favor. On the other hand, if you short the market also here, okay, if you go against the trend and you short the market also, still your risk to reward ratio does not match, because the market is in the middle. And as I always say, do not chase the market, let the price come to you. And if you go ahead and trade here, then you will be compromising with the trading discipline. Therefore, as long as market is trading in the middle, this is your no trading zone. You should not trade in the middle and let the market do whatever it wants to do in the middle. We will not interfere. You should not intervene. Just wait for the market to either hit this level or either hit this level. Generally, in an uptrend market, mainly we go for buying opportunities at the support only. But in the chart of USD CAD, you may get a sweet opportunity to short the market at the resistance also, and let me show you. If we go to the weekly chart of USD CAD, and if I remove the drawings here, then you can see that though market has formed a green candle right now, but we have a crucial resistance in the weekly chart, and market is trying to cross this resistance level for a long time. Previously also market tried to cross the resistance, market failed, and there was a sharp fall in the market, and right now market is struggling again, and the level is this 269 wait, and the level is 2610 level. Okay, 2610, it's 1.2610. So 1.2610 is also a crucial resistance for the market. Therefore, we have a trend line which is acting as support for the market, and we have a resistance from the weekly chart which will be a crucial resistance for the market. Therefore, though this market is an uptrend, we may get a sweet opportunity to short the market at this level. At this level, around this level. See, this one 260 around this level. When market will be around will be trading at this level or will hit this level, then just observe the price. Though this market is an uptrend, you may see some good selling pressure from upside, and if you see some good selling pressure from upside in the form of a shooting star, price rejection from above, or a red candle at the resistance, you can also short the market. So this is also your one of the best trading opportunities in this market. So the best trading opportunity is this support level, and the second trading opportunity is this the resistance level. Buy at the support, short at the resistance. And if we look at the Forex Sentiment meter here, you'll find the Forex Sentiment meter in my website avilashhajarika.com under Forex 101 section. So if we go to the Forex Sentiment meter here, then we can see that 57% retail traders have taken short position and 42% retail traders have taken long position. And as we all know, 90% retail traders lose money because they take bad decisions, and as a result they lose their money. See, they have already taken their short position. 57% retail traders have already taken their short position, and market is still in the uptrend. Therefore, this is not the ideal time to short the market here. Only short the market if market reverses from the trend line or the weekly resistance level. But this retail traders have already taken short position and they are running in loss. Do not trade like the rest of the traders. Trade wisely, trade with analysis. And if you are looking for another opportunity, then you can go to the Forex Heat Map here. In the Forex Heat Map, you can see that you may get there is good opportunity going on in the British pound here, Japanese British pound, where it is up by 0.46%, whereas NZD USD in the New Zealand US dollar chart or the New Zealand euro chart, you may get good opportunity to short the market. Where the box where the color is deep, there is good movement going on. The boxes where the color is extremely light, there is not much movement here. For example, if you go to the chart of if you go to the box of Euro USD here, you can see that the color is extremely light and the change is also very light, 0.03. On the other hand, if you go to the box of NZD USD, you can see that the color is deep red and the change is also deep, 0.3%. So if you are looking for good movement in the market or good opportunity, then you can also consult this Forex Heat Map. It comes very handy to the traders. And if you come to the Forex volatility calculator here, you'll come to know how much movement you can expect in a particular time frame. For example, USD CAD. In the 1 minute time frame, you can expect 1.3 pips. In the 5 minutes time frame, you can expect 2 pips. And if you come to the 1 hour time frame, you can expect a change of around 12 pips. In the 4 hours time frame, you can expect a change of 33 pips. So it's not bad, it is good. 33 pips in the 4 hours time frame is quite good. But if you go to the for example, if you go to the chart of AutoCAD, you can see that AutoCAD, there is not much movement. In the 1 hour chart, there is a movement of 5 pips, and in the 4 hour chart, there is a movement of 19 pips only. So this calculator will tell you which pair is good to trade and which pair is not good to trade, because in trading we need movement to make money. If there is no proper movement in the market, then you cannot make money. So this Forex heat map and the Forex volatility calculator comes handy when it comes to identify the good pairs to trade, because volatility is we need. Anyways, this is all about the USD CAD. Hopefully you've understood. So if you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow.